Hello there. So we're back for another video. So we had my year-to-year performance review in the last video, but so there's a bit of overlapping time from like the regular update. So what we've got today is we've got from the 5th of September to the 24th. So obviously this covered a bit of the period, which I just went through to the 6th of October. So 5th, 1, 2, 3, 4, 5, 6, 7 weeks. All right, and so what's happened? We've had my portfolio has returned 5.2%, but the Life Strategy 180 have both beaten me, and the Life Strategy 60 has done worse. But then if we obviously because we've now gone into a new accounting year, this from the 6th of October things kind of resets back to zero, and you can see there from the 6th of October I've been doing reasonably well. Yeah, and as you can see again, there's my big disclaimer. I'm a terrible investor. I've made 49% since 2017, which is absolutely horrific. And the life strategies have all done these amounts. So what have we got then? We've had in that 7 weeks we've had dividends of 1302. But you can see here with the dividends, I've got projected that. I've called it a baseline projection because obviously all of these dividends should have hopefully, well, most of them hopefully should have increases before they actually happen. That's why they're all greyed out. At like the lowest level, it should be 0.63% lower than last year's dividend. And that's because towards the end of the year, I kind of started selling high yielders and buying lower yielders. So who knows? I might kind of do the reverse a little bit along the way this year to kind of counteract it. Who knows? But yeah, as you can see, it's now 0.63% lower because I think we've just had BRSC's had a 3% increase to its interim dividend. That's BlackRock Smaller Companies. Yes, because it was so this number's just gone up a little bit just recently. I think it was yesterday. Yeah, and actually BlackRock Smaller Companies is going to after this year, so next year beginning 1st of March 26. It's going to go to 4 quarterly dividends instead of 2 a year, which I don't really care, to be honest. All right, so what's actually happened? I decided to give you an update because I've had quite a bit of activity the past few days, so I figured I'd fill you in on it. Well, actually, this was a while ago, 14th of October. I just did a little bit of trimming of GSK and put some into PFE. Oh yes. I've been looking to do this for quite a while. I was just kind of waiting for a 2 percentage point difference in the yield of the two companies. And that yield is after the tax that I have to pay on the Pfizer one. So if we look here, that number there, I mean, it's come back in a little bit now. So that the difference between those two numbers was 2 percentage points. And that's what kind of triggered me putting 500 quid into Pfizer from GSK. I'll probably leave it at that because, I mean, even though the Pfizer holding is smaller than the GSK one, you can see there, the amount of dividends I get from the two of them is roughly equal. So I'll probably leave it at that. If this goes to 2% difference again, I'll probably leave it as it is. 2 percentage point differences. It's important that. Yeah, so I just put a little bit in there. That gained me a tiny amount of dividend expected for the year ahead. Although, to be honest, I'm not really confident that there won't be a cut, to be honest, in Pfizer. I feel like American companies, unlike less so with British companies, just because of the culture of dividends, I feel like American companies are more likely to slash the dividends. So I'm thoroughly expecting Pfizer and UPS to cut their dividends, at least cut them, maybe even just shelve them for a while. I don't know, completely, at least reduce them. But although I wouldn't even be surprised if they just stopped paying them for a while. Yeah, so that was a couple of weeks ago. And then this week, I think we're on this week, yeah, the 21st. Oh, actually, this is nothing to do with the portfolio. On the 21st, I saw that there was an offer that if you got the ZOPA current account and you paid 500 quid into it every month, you got a boost to your savings account. Now, I already had the savings account. So what I did was I opened the current account, paid 500 quid into it, and now my savings account that I already had is being paid 4.75%. Now that's quite a good deal. That's 0.75% higher than the base rate. And I had a look at ERNS. I went anyway. I had a look at ERNS's last year's performance, and I had a look at a chart of the base rate, and I estimate that last year ERNS, which is the money market fund ETF kind of thing, the short-term bonds, it made last year 4.4%. Sorry, actually no, it wasn't 4.4%. whatever it made, I calculated that it was roughly 0.4 percentage points higher than the average base rate that we had over the year. So I decided that if history repeats itself and we got 0.4% higher than the base rate, that would give me a 4.4% rate of return on ERNS. So I decided that this offer from ZOPA should beat ERNS, and so I sold it. As you can see here, right, I sold it and put all of my cash into the ZOPA savings account. I left a load of spending money in trading 212 as well, though, and I'm saying it, I'm just wondering, should I put a bit more into one of my other savings accounts just in case there's an issue with ZOPA, because it is a kind of challenger bank, isn't it? Maybe I should put £1,000 or two in another one, or maybe a more established bank. Anyway, yeah, I don't know why I didn't think of that before, but yeah, it could be dangerous, couldn't it, if it doesn't do. I mean, could this really good deal be a sign of desperation on their part, and it might signal trouble? And then, I mean, I'd always get my money back, but there could be a delay. There could be a cash flow issue while I'm waiting for my money to come back. Okay, yeah, I don't know why I didn't think of that before, but yeah, it's got me thinking. Just explaining it to you guys got me thinking. I might put a bit somewhere else that's a bit more safe. Oh yeah, and there's still, but obviously I still have my holding of the pie, because the pie, I think it's 65 quid in it at the moment. Basically, I have a pie that has ERNS in it as 100%, and then by selecting Auto Invest Cashback, I get 1.5% cashback on all the money I spend through my Trading 212 card. So yeah, I've still got a tiny ERNS holding in the Trading 212 account. Yeah, so that was nothing to do with the portfolio, was it? And then the day after that, which was the Wednesday, this is another thing I've been looking at for a while. I sold land securities, because it just had a really good run. If we look at the if we look at the performance from the 5th to the 24th, actually no, let's go to 5th to the 21st. Let's go to the 21st. No, let's go to the 22nd. Change that there. We can see here that land securities, if we go down, I think I've still got it here in the spreadsheet. Land securities to the 22nd, which is the day I sold it, land securities was up 19.65%. I just felt that was a really good run. And at that stage, there was a really big difference in the yield. And as you can see here, regional REIT, bit of a basket case because it's full of offices, 90% offices, is 7.64% down. So I don't know, felt like a good time to change. The differential in the yields is so massive, from like 6.2 to 8.9 at the moment. Obviously, it might have been different slightly on the day I did it. But yeah, it's a 40% discount to NAV. I think this is partially, I mean, land securities itself was a pretty massive discount to NAV, but it was even bigger when I bought it. But as you can see, a few days later, the discount to NAV is still 25%, which is quite high compared to my other property holdings. But yeah, this is, and I think they're both at big discounts for the same reason. They have a lot of offices. But I mean, Landsec have a plan to like reduce their office exposure and put more into like homes or like flats and stuff. Residential, that's the word I was looking for. But yeah, regional REIT have no plans, no such plans. I think they just think that the office market has hit such a trough. COVID was a good 4 or 5 years ago. So their philosophy is, well, look, everybody's stopped going to the offices now, and maybe this is the kind of nadir of that whole working from home, and maybe now. And they also have things in their presentations where they talk about the fact that because it's at such a low ebb in like sentiment building up, people just aren't building new offices. So even if the demand for offices is lower, the supply of them, they think, is even lower than that. So I don't know, it's kind of like a contrarian play on this whole office thing. And at a 44% discount to NAV, I don't know, it just felt too good to not have some money in, I guess. I did have kind of buyer's remorse. In fact, 10 minutes later, I think, what did I write here? Yeah, I've written risky here with an exclamation mark. Yeah, I am a little bit torn. I've said this many times, I do have rushes of blood to the head sometimes. Because to be fair, RGL wasn't that much on my radar until the moment I kind of bought it, because I was actually looking to replace land with Schroeder Real Estate. But as you'll see later, as we can see here, but yeah, Schroeder Real Estate's also had a bit of a comeback, to be honest. I kind of missed the opportunity to go into that. And then as that opportunity passed, RGL kind of looked good to me instead, I guess. So yeah, that's the thing. So yeah, with Regional REIT, because it was such a higher yield, what I've done is I've penciled it in as keeping 25% of the dividend I get paid. So I've made it just slightly ahead of Landsec's yield that replaces it. So I've made a few pounds more, but I'm going to reinvest 25% of its dividend just so that it's not too high. You know, that barrier to replace it. If I wanted to sell it and replace it, that 8.9% that it actually is underlying is a bit too high. You know, I didn't want to inflate the yield of my portfolio. I just wanted to swap Landsec for something with a bit more of a discount. So yeah, 25% of that I get reinvested. Usual story. I might go straight back into this one, or I might just choose something else in the moment. All right, so that's what I did on the 22nd, and then on the 23rd, this I've been looking at for quite a while, probably 2 weeks or so. I noticed that NESF, so that's Next Energy Solar, and TRIG, the Renewables Infrastructure Group, I noticed that their NAV, or discount to NAV, was getting closer and closer to SEAT. And I think I've still got the data here for them. There's SDCL, TRIG and NESF, yeah. So as you can see, as things stand today, their discounts are pretty similar. Although actually, I've copied what the data was when I actually did the move. So when I actually did the move on the 23rd, these are the prices I got on my deals. So I sold SDCL at 61.669, which is a 31.93% discount to NAV. And I bought TRIG at a 29.7% discount, and I bought Next Energy Solar at a 34.26% discount. So I just figured those discounts to NAV were so close now. Because when I bought SDCL, it was at like a 40 or maybe even 45, I can't remember. It was a massive discount, and the differential between the discounts was really big. And now I've kind of, if you average out those numbers, I've actually gone in at a bigger discount than I sold SEAT. So yeah, we'll see if that works. So what that's done is because my SDCL holding was actually, I was reinvesting all of the dividends I got paid for that one, because that came from a growth stock, I think. I can't remember exactly where that cash came from. But because that was essentially, I was treating it as a zero yielder by reinvesting all the dividends. So what that's done is it's made NESF and TRIG a much nicer yield that feels less dangerous. So NESF, I'm pretty sure, is going to have a dividend cut at some point. This is yielding. If we take out what I've done here, see, I've reinvested all of the new shares by subtracting that there. If we take that out, it's a 13.78% yield. I don't think it can survive the dividend. So that now has, that can more than half, and I can just still take my 348 quid. And I've done a similar thing with TRIG. Okay, so I forgot to show you the information about the sales I made. So as you can see here, the GSK was in. I sold it from the trading 212 ISA, so I made 26.84% on that one. But I mean, obviously my overall holding is less than 26% up. But because this is just the ISA's cost basis, that's why it's different. And then we can see here that Land Securities may be 17.59% in total, which is a pretty good little return. And then SEAT did really well. It made 29% most. I mean, this is a tiny amount. This 133 quid that was in trading 212 ISA. So yeah, most of it made about 29%. And this was just reinvesting some of the dividend from it. So yeah, 29% is pretty good. Pretty good. Yeah, so that's all the moves I made this week. So yeah, let's just have a look where all that performance came from. JP Morgan smaller company. Have I got the right date? Yes, I do. Yeah, JP Morgan smaller companies did badly, and pretty much everything else did well. Pfizer did badly. Yeah, NatWest Group has had a really good Friday. Actually, had its results out Friday, and And earlier this week, Barclays did too. So Barclays is back up where it was before, and I think NatWest is like 3 or 4% higher than its recent highs. So that's doing pretty well. Yeah, like I say, Schroeder Real Estate did pretty well, and obviously for most of the time I held land securities. So most of that 20.48% I got because I only sold it a few days ago. And Gore Street Energy. Yeah, this is one that I was so active this week, but this was another one. I could have made another move this week, but I didn't, because what I said to myself, what I've done here is I've kind of adjusted the prices. Just if I were to put half of the Gore Street Energy money into Gresham House, I've added 1.5% just for the spread and the stamp duty, and then I've taken off 1% of the price of Gore Street. And what I said to myself was, when the discount to NAV got to the same as it was when I sold Gresham House and put it all into Gore Street Energy, when it got to the same, I would put half of the money back into Gresham House, just put it back where it came from. But when push came to shove, you can see here, I'm glad I didn't, because it's gone even lower. The differential between the discounts after adding my spread is lower now than it was before. And I don't know, I'm in two minds. I'm thinking to myself, should I just wait until they're equal? Maybe not equal with the spread included, but maybe I just see up here is without any spread or stamp duty added. This is just the discounts. If there was no friction, if there was no trading costs when you switch from one to the other, this is the discount, 4.26%. Maybe I'm thinking I'll just wait until they are at the same, basically that's zero. So that number is equal to that. The discount to NAV is the same for both of them. Maybe I'll wait till then. So I'm guessing, based on this, that would mean that actually my estimate of what I end up getting might be 1.5, 1.6 maybe percentage points different because of the spread and the stamp duty and stuff. Yeah, so I haven't pulled the trigger on that yet. I'm still 100% of my batteries are with Gore Street. Having said that, I think Next Energy and Trig, I think they have a tiny amount of batteries anyway, so it's a lopsided position, 14 grand now, because it's been doing pretty well, obviously, because it's come back a lot. They've had like new boardroom, they've had a shuffle of the boardroom, and there's activist investors in there. Sabre have taken a 5% stake, and they already had an activist investor as well before then, so it must be like 10%, like in total activist investors in there, so who knows what might happen. And then in terms of my trading, 212 Growthy Pie, how have they done? Oh, CrowdStrike's doing well, and ASML, they're doing really well. Alphabet pretty good, and actually I think Alphabet's the biggest one now. I've forgotten what to do with this. It's been so long since I ordered Control. Is it Control Shift Alt 1? Yes, it is. I don't do it as often now because there's hardly any holdings anymore. Yeah, Alphabet's the top now, which makes sense considering that's a pretty decent run. I've been considering equalising Amazon. I feel like out of all of these like mega big companies at the top here, I feel like Amazon's due a bit of a run. So at some point I might take 100 quid each out of these and put it into Amazon just so that it has a better chance of catching up with the other three big ones. Anyway, so there's all the data. Okay, so I've got all the photos since the last time. I just don't take photos really. There's hardly anything on my phone. So here's me just leaving Kuala Lumpur. I went to getting on the bus to the airport. In the airport, just random photos. There's nothing. It's just me showing me mum that I'm making steady progress to my next location. And this was the bus to. I was in Kota Baru in Malaysia. Completely random location. There wasn't much there, to be honest. There was just like a shopping centre near me flat, and I don't really do much. I'm not on holiday here. I'm just kind of existing really, and moving around gives me something to do. Caught the bus to my Airbnb, and the patio of my Airbnb seems to have some. I've forgotten the name of these things. What are they called? Put it in the comments. I can't remember the name of it. It's on the tip of my tongue. This is on the. In Vietnam, I had like one of these in my actual room. The lady there just told me they, don't worry about it. There's no stopping them. and they just run away from you. They don't cause any trouble. And she was right, you know, it just kept away from me. The only reason I saw it is because the room hadn't been used for a couple of days. And as soon as I walked in and it saw me, it scampered off really quickly. And there's a nice clean river where I was just walking into the town from the Airbnb. Muddy river. It was a nice walk though. I kind of like going to these places where there's just zero tourists. And this was literally just a random town. I just like the look of the Airbnb. I booked it. There's zero tourists there. I don't think I saw another white person for the whole month. I don't think. Yeah, I can't think. Ah, no, I did. I saw one. Guess where I saw him? McDonald's. What a surprise. And where's this? Oh, this is on my way back to Kuala Lumpur. This is what I tend to do. When there's like a 3-month stay that you're allowed, what I tend to do is I go to the main big city for a month. I go to a random city or town or whatever for another month, and then I come back to the main city. It just makes the logistics easier, because it's like you always get better flights from the like capital city of each country. So this is me going back to Kuala Lumpur. This is it. I just don't do photos really. I was a bit obsessed. I kept seeing ships. Oh, you can't really see them properly there. What's the next picture? I was obsessed with all the ships that were in the river, in the sea. I don't know why. I think we get a close up. Ah, here we go. We can see that one better. But I didn't realise there was that many ships in the sea, even if you were near like a busy port. I didn't realise there'd be that many of them. There we go. That's nice and close with all the containers on there. It was The Wire, was it? Was it The Wire season 2 about all that stuff? What's this? And this was the bus to my second Airbnb in Kuala Lumpur. And the monorail again. A different one this time though. Different area of Kuala Lumpur, which is where I am now. Oh yeah, and this is what I do when I go shopping. This is why I don't spend any money, because before I need something, I'll take pictures. I'm like, here's this shop's bargain, and I'll see if I can beat that before I need more coffee. And this is actually yesterday, just random place. I thought to myself yesterday, oh mate, I'll make a video tomorrow, so I better take some photos. And I just took this photo. I had no idea what it is. Just a little park with some water and a little waterfall that you can't see really because my camera's not very good. Alright, that's that. Yeah, back to the beginning. Alright, that's all I've got for you folks. I guess I'll see you next time. Have fun. Bye bye.